All right, good afternoon. Welcome to the weekly take on the market. Today is Friday, October 4th. It is 1:11 Pacific time. Market just closed. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here, Investors Business Daily. The disclaimer, please take a moment to read it. I'm not licensed. I can't tell you what to buy, what to sell, what to hold. These webinars are vetted for compliance for that purpose. Okay, great. All right. We'll get into the market. Stocks to watch. Oh, I'm going in the wrong order here. Market, industry group, stocks to watch, quote of the week. Kind of follow the same steps here or there, unless I get off the tracks. So it's been a very good year in the market. This is year to date positive months. And because 2024 was grayed out, I was like, where's 2024? So it's in the 7 to 8 camp. So strong number of strong months. And it is what it is. I think there was a guy on CNBC that said, he quoted the Reminiscence book. It's a bull market, the turkey story. And I've said 100 times, if you haven't read that book, you got to read it. It's a tad bit dated, some of the terms, et cetera, but the mindset, the psychology, the concepts are just so timeless. I couldn't tell you how many times I've read that book and listened to it on tape, in fact, or tape, CD, Audible nowadays, right? That's the progression that I've been through. So it's a bull market, and that just means it's try not to overthink it. I'm just as guilty of anybody that's out there saying that they overthink it. I'm in that camp. I overthink it way too much, obviously. So I'm speaking to myself. One of the great things I love about this video is it's kind of, I kind of think about, like, what would I like to hear? Sometimes I need to hear it myself. I think that might be it as far as slides for the market. So that I grabbed. Let's pull up the indexes. And here's the NASDAQ. So today was a very strong day. It opened strong, it tried to go down, and then they catch it. Again, it's a bull market. That's what they do in bull markets, right? If they open it higher, you get some people that like to sell into that. I'm one of them. It goes down, you think you did a good thing, and then 2 hours later it's back. So it's just a really strong tape. I think the last time I did the video, I said they've had a couple of chances to get the market. If the market was going to go into a bear market phase or a corrective phase, I feel like they've had their chance. These two nasty breaks were plenty of chance to take it down, and it couldn't go down. It whipped back really fast. So this could be construed as a little cup with handle. I think the NASDAQ is underperforming, and that's because of the weighting of it. The market has shifted a little bit. The money not necessarily come out of the Nvidias and the Apples of the world, but they're not getting any new money, I guess. And that new money is going other places, so the S&P is outperforming. So here's the peak on the NASDAQ here, and here's the RS line. And it'll be key, like if the NASDAQ can get here, I'm pretty certain there's going to be a gap here, but it's just a matter of how much. Is it going to be a lot? Is it going to be a little? That would be kind of important, I think, at that point. The S&P, oops, looks very good. I don't think this is a closing high. Maybe a few days ago that was a closing high, but it's just hard to argue with that price action. So, do you have to be 100% invested? No, ideally you'd obviously like to be, but it just depends on your style. And Charles Harris was on IB Live this morning saying, he likes to sell into strength. I like to too, and so sometimes they don't pull back and give you another opportunity. So that's kind of where I'm at. And I'll get into it. The CEGs, the VSTs, the Coherence of the world is just they're better suited this time around for people who don't do what I do. Next cycle, I'll be glad that I sell into strength. I think you just decide what type of investor you are. You just do that all the time. Sometimes it's going to work, sometimes it isn't. I've tried to cherry pick them. Oh, well, this time I think you don't want to sell them, and then they roll over, and then it's, oh, this time I think you do want to sell them, and then they go up, and you're just frustrated to no end. So I just think you pick the style that's best suited for you, and you just stick to it and just follow that strategy. Let's look at, what else do we want to look at? Like, let's probably look at like gold. Nothing wrong with that. If you're in it, it's not doing anything wrong. Silver tried to go today, kind of peeked its head out there. I don't know why it went really fast and then got pushed back. Yeah, I actually bought silver because it went above that and then it came all the way back. So I just got out. I just don't have the heart for it. If it's another thing, if it's can't stay up in a tape so strong. Now silver is not going to be that influenced by the NASDAQ, but it's really kind of what I will do sometimes. I don't like the way it closed. Just move out, look for other stuff, stay the course in the other stuff. China is super strong. Here's K-Web. Just explodes out of the space. And been beaten down for so long, and even I was pretty negative on it. I just felt like it was just an avoid. And then, they announced that stimulus and just off to the races. Is this real? I don't know. I don't know if it's real or not. If it is real, there'll be some kind of consolidation and, you'll have a second chance. Because if it's like David Tepper was on CNBC, he thinks this is like 2010-ish US scenario for China. And in 2010, what did the market do? It had came off the lows. And if you thought, oh, I missed it, I missed the lows, guess what? It was really the beginning. We're kind of still in that same cycle with a couple of hiccups along the way, like the COVID and the what do they call that? The Christmas Eve massacre, where the market went down pretty quick. But truly, for most investors who just kind of buy and hold, is still in that long bull market. So maybe this is that. You just have to find your spot if you're interested in China. If you're not, you just say, you know what? I would never have bought it anyways, and it can go to the moon without me. If it does, so be it. I think that's it as far as indexes, etc. Let's jump to the industry groups. And number one is telecom infrastructure. 19 stocks. There's enough. It's I can't. I don't think I did this. I got home from the Founders Club on Sunday, and honestly, I did some stuff, watched some football, and before I knew it, it was, I didn't do my work, so I missed this week, unfortunately. So I don't. This is like all new to me as well. So oil and gas royalty trust, beverages and alcoholic, energy alternative other, interesting, steel specialty alloys, utility electric power, right? We know what's going on there. So it's very, very interesting, the group makeup. So I think I owe a little bit extra this Sunday in this area to try to get a feel. But in general, it feels like there are places to buy. There are some oil stocks I think are acting great. There's, I don't know if you want to consider the CEGs and VSTs utility stocks, but they're acting great. Technology, NVIDIA, Coherent, Southern Copper, SCCO, it looks fine. So there's all these places to be, which is kind of nice. So you can be, if diversification is something that you're concerned with, it's there for you if you want it. All right, so let's jump into the, oh, I know what I want to do. See, I almost got cart the head of the horse. So when I think of stocks to watch, I wanted to pull up an example of a stock and kind of the thought process of how you would analyze a stock, and sometimes we all have a bias, like we remember the ones that we missed that went up, and we don't remember the ones that we passed on that went down. And at the very moments, maybe it doesn't check the boxes for something you'd buy. So like here, if I gave you this chart here and you don't know what the stock is or what time frame is, would you buy this stock? And I look at that pattern, and now there's not much of an uptrend, right? We'd prefer like a previous uptrend. If you're counting 68 to 90, I guess that could be the previous uptrend. You see how you can kind of make it your own. If you didn't want to buy it, you could say, well, there's no previous uptrend. But if you did want to buy it, you could say, well, there's a previous uptrend, 68 to 90. And so that's kind of the art and the science of it. This looks like very strong pattern, cup with handle, breaking out right through the pivot. This, to me, if you gave this to me, I'd say I would buy that. Okay, then I give you the fundamentals. Well, the earnings and sales are very pedestrian, just basically flat to slightly down to slightly up. The industry group is fine. And then you'd be, okay, so how heavy do you put on technicals versus fundamentals? I tend to weight the technicals, although I'm trying to get more into the fundamentals, but I've always been like a chart guy, and I put a lot more weight in the chart, right or wrong. So, but other people might say, well, I wouldn't buy something if it had earnings down that weren't up 25% or more last quarter. Okay, so this would be a pass for you at this time. And what about the macro backdrop? Do you guys think of that? Well, what if I told you this is not a US listed stock? This is an international stock. Some of you might say, well, I'd never buy that because I don't buy international stocks. So you see how you kind of have all these factors that you have to build into your model to when you make a decision. And this is, some of you might know, but this is BABA right there. So I didn't buy BABA right there because I basically had said, let me give you a little backdrop. I've always been open to buying Chinese stocks anywhere across the world. I think I'm open to that idea, with the caveat that I believe that the best companies are in America, or right or wrong. That's kind of what I believe. But that doesn't mean there can't be a single great company in Belgium or China or Indonesia or Japan or Brazil or Argentina. So, but I got out of PDD here. And then it did this on the earnings, and that just kind of spooked me, honestly. And I felt like, boy, that was a gift to get out of PDD there. I would have, if it hadn't had that bad day, like if the earnings were the very next day, I would have been in it. Like I only got out of it, I just don't like that action. So, and it had nothing, I didn't even realize the earnings were coming the following day. So I felt like the stock market gave me a gift. Sometimes it giveth, sometimes it taketh. So I'd kind of sworn off the Chinese stocks at that point. So I didn't take this trade in BABA. So, look, I wish I had, but I'm not going to let it bother me that it's up 34% in 12 days, because I wouldn't have bought that. So some people have asked me, I got a bunch of emails about China, like how would you handle this? What would you do that? How could you have gotten into Chinese stocks, et cetera, et cetera? And you have to be intellectually honest with yourself and say, well, if you had a bias against them, you wouldn't have bought them. Don't reverse engineer. Oh, it went up a lot, therefore I should be in. Well, at that very moment, if you saw it, if you're doing your work, you probably passed for whatever reason. So I think it was very quick, but it was there for you if you were open to that. And even for myself, like if I was open to buying them, it was right there for me to buy. So I can't fault anything but just my own biases. I had developed a bias against Chinese stocks, fortunately or unfortunately, right before this big wave up. And so I just have to live with it, and I'm not going to let it bother me. Some trades that bother me is like if I had done all this work and I was really bulled up on China, and then I just hesitated, oh, I'm waiting for a pullback or something, then I missed the trade, that would bother me. Then I'd say, boy, I really messed that up. But I didn't mess this up. So you have to kind of think about that in that regard when you think about these trades, these big moves that happen. If you're not in them, there might be a reason why. Okay, so on the Chinese side here, CAF, this is a China A shares ETF, very powerful move. If it's real, I think it'll do something and give you a chance to get in if you're interested. There's KWeb. So there's other ways you could play it if you want from the ETF side versus the individual stock side. So there's BABA, KWeb. Those are a few that I wanted to talk about. Let's go to the NVIDIA, let's start the NVIDIAs of the world, the other stocks out there. So NVIDIA, I've got this little trend line. I don't know what to make of NVIDIA. I think it's going higher. So I've been a couple of times I've been in it and then got out and then been in it. And I think it's going higher. I think I probably need or want to be in it, but I'm not, I need to develop a little bit more patience. So I'm waiting for, if it breaks that line, I'll probably enter it for whatever that's worth. But it's acting fine. If you're in it, if you're Kathy Donnelly, you're just like, great. This is acting awesome. Just sit back and let it do its thing. Hasn't broken any of these like long-term rules. AMD was interesting today. I thought about that coming through like this little area. I could manufacture like a little cup with handle there. Had a strong day today. So you can see how kind of the bull market story. Let's look at SMH because to me that looks like a head and shoulders, and it still potentially could be. So there's a couple of flies in the ointment to the bull case is the relative strength of the NASDAQ as a whole, and then the leading indexes like semiconductors still do not look all that great. It could right itself. It's possible, but that's just kind of my. If I want to play the other side or think about the other side. Feng Yu, so not as textbook as SMH, but yeah, I don't know. This looks pretty good. I wouldn't want. I just can't bring myself to be long it. Honestly, I just feel like it's so long in the tooth. But look how far off the bottom it is. But I would have said it was long in the tooth at 200. So you have to keep that in mind. But I didn't, this is something I'll go to if I want to be short, and I just don't have any interest in shorting that. So, what else is out there? No, so I did AMD. No, let me turn my camera off. I apologize. I know sometimes it'll cover up the charts. Let's look at Kava. So it just looks a little tired, like it just needs to consolidate and do its thing. Back to Charles Harris on IB Live. He said something interesting about this, which I thought I never thought of. Don't really build into my scenario analysis, but he talked about the PE. Look at the PE. He goes, I just can't get over the PE is so high. And I thought that was interesting because normally we don't look at something like that, but he says he does look at that. So he hasn't been in Kava, even though the story is compelling, that potential for more stores. If you're in Kava, I think it's acting fine. It's not doing anything wrong. We wish they'd all just go straight up, but they don't. So I think if you just kind of use a defensive sell signal, a hard break of the 50 or 10-week line would be your thing. I mentioned SCCO. So I actually bought this. So I thought this was a double bottom. When it undercut there, I bought it somewhere in there, either there or there. And so if I bought there, I probably got stopped there. And if I bought there, I probably got stopped there. And then it kind of did what I was hoping it would do when I was in it. Not in it, but looks like a pretty good setup. Strong. Melly. So Melly is a good example of a stock that I would buy and then I would sell. And then, you take the good with the bad. So this would be a good sell, right? I'm out at I don't know, 2000 and change. And now, stock's 100 and change below that. Whereas something else that I would sell, and like VST, sell and then watch it go up another 20 points without me. So that's I save 20 points in Melly, lose don't save it in Vistra. So that's kind of why you don't want to cherry pick them. Maybe I decide to hold Melly and sell Vistra, and then I don't make any progress. This stock is just on the rampage, acting great. it all depends on style. If you're like me, I know it sounds, it just has to pull back. I'm just certain it's going to pull back. But again, I've been wrong. I thought it would pull back these number of days. I think I counted it was up 19 of 20 days when I decided that was enough. And then now it's up maybe 24 of 25 days. 2, 4, 6, 8, 10, 12, 14, 16, 18, 20. So just amazing strength. Strength begets strength, which is why we buy breakouts. They don't always work, but this is why we buy them. CEG. So if you bought CEG, let's just say you paid the pivot, you're up 21%. You bought VST, let's say you paid the pivot, you're up 29%. You bought XYZ, it went down 8%, you got out. You bought ABC, it went down 8%, you got out. If you're using proper money management, you lose 8, you make 21, you make 29, you're only half right and you made a bloody fortune because of the ones that went up way more. That's the asymmetry of what we do. So you just have to be comfortable with that. To have a really big winner like an NVIDIA or something, I think you're going to have more losers because you're just going to have to give them a lot more room to breathe. So you got to be wrong, boom, big winner. I just don't, for me, right or wrong, I'm just not comfortable with being wrong so many times. I should be after all this time in the market and just knowing that that's the process, but it's just psychologically very difficult. It can be draining of your mental capital. So that's why I don't trade that way. But for other people, they don't have a problem with that. They're willing to do that over and over and let the really big winner pay for it. Let's look at Coherent. Another really strong one. If you bought the pivot, you're up 18%, triggered the 8-week hold rule for whatever that's worth, if you want to acknowledge or honor that one. So there's been a lot of good stocks. They're out there. As soon as you give up on the market, they're out there. Okay, so VST, CEG, these are the leaders. Coherent, VST, CEG, leadership galore. Do they need a pullback? I mean, I think that seems painfully obvious. Kind of ancillary. C Limited is something that I really like. I'm down to just the tiniest of position because I've thought a lot about like why sell it all, Scott? Why not keep something? And so I'm trying that with C Limited. I've sold most of it, but I do own a little bit of it. But again, I didn't buy the pivot, or maybe I did and sold it here, but I just bought it somewhere in here and sold here and, it took 19, 18, 22. It doesn't matter. I just figure at some point it's the profits, it's moving my accounts, making a difference. I'm going to do some selling into that. But if you're in this and you have a different style, it's acting great. Leadership, more leadership. GLNG, there's kind of an oil stock, broke out up 6%. I think I bought it there, I think. And this was really tough to stomach because it opened higher and it's swerved lower. Then it gapped up again. So, but this one looks good to me. And you have a little bit of diversification. I think, let me go to CNX first. So I mentioned CNX. I think I was on IBDI this day, and that was kind of the stock of the day, and I just couldn't bring myself to buy it, but obviously wish I had. But again, what I'm trying to highlight is the strength of the market and the diversity of it, for lack of a better word. There's just lots of different areas that you can be trafficking in. GGAL, which is the Argentinian bank. It probably needs, okay, let me, for a compliance standpoint, I do own GLNG. I do own C Limited. What else did I mention that I do own? I do own a little bit of Coherent, very little, unfortunately. And I do own this one, Grupo, the bank. So GGAL, and I think it just needs time. But here again, patience triggers the rule. You want to honor that rule. You're 6 weeks in, and you just, you can see what it can do. Last but not least, KMI. The reason I want to talk about this one is it kind of leads into my, well, I do have two quotes of the week this week because I couldn't decide. Anyways, I was buying KMI here on IBD Live, and somebody in the chat asked me, well, Scott, why that one? Or I can't remember how they worded it, but the main thing they said was, Scott, the relative strength is 82. And I think they were implying, right, why would you buy that? The relative strength is 82. And the short answer is there are no perfect stocks. They're not all going to line up perfectly. If you're waiting for perfect, whether it's the market, whether it's the stock, you're going to do very, very, very few trades, and I think you'll be disappointed in the results because you get paid to take risk. You get paid for that uncertainty of the market. When the market goes from uncertainty to certain, you need to be in there because that's how you get paid, right? So you have to be willing to take risks, be comfortable with the uncertainty. Who's gosh, I wrote down this quote, and I can't remember who said it, but you got to be uncomfortable with the uncertainty, but confident in your behavior. So I'm uncomfortable with the uncertainty of what the market's going to do, but I'm confident in my behavior that I'm going to respond accordingly. I'm going to cut my loss correctly. I'm going to sell when the ducks are quacking, blah, 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 blah. I don't always do that, but I mostly do that a lot of the time. So I'm comfortable with that. So yeah, I was 82, but honestly, I didn't care. I don't care is the short answer. So let me get into the quote of the week. And David Tepper, who had been buying Chinese stocks, he's the founder of Appaloosa Management. I believe he's probably just a family office now. He's the owner of the Carolina Panthers, so he probably doesn't run any other outside money. But he was on CNBC talking about the Chinese stocks that he owned, and one of the hosts asked him about the macro backdrop of China in general, and he just said, "I don't care." I love that because sometimes I just want to say, "I don't care," and I do think that, like, I don't, and it's kind of a strong statement, like I do not care is what he said, but it's more like the nicer way would be to say, like, yeah, I understand the macro backdrop is not perfect, but, and he just, he's a billionaire. He can just say, I do not care. I buy him. I don't care. And so me not being a billionaire, I need to be more nice about it and just say, well, like the relative strength is 82. You're right. I'd prefer it to be higher, but this, and this. And so that's kind of the thought process of these great investors, is they're willing to overlook flaws, or willing to overlook perfection. You just don't have to have perfection to do well in this game. In fact, if you're looking for perfection, this is the wrong game. You should play chess or Go, or one of those games where you can control each move accordingly, because you're just going to be frustrated when you're looking for perfection. I liked this guy's podcast. I can't remember which podcast he's on, but if you just he has a website, search Drew Dixon of Albert Bridge Capital, and you can find the podcast he was on. I loved what I still make the same mistakes, been in the business forever. Just because I know about it doesn't mean I still don't make them. I know I'll make mistakes. I want to document them. I want to set up a culture at my firm where it's okay to do that. I love that. So it's okay to make mistakes. If you know it's okay to make mistakes, you won't hesitate on a trade. You'll just take the trade, and if it turns out to be a mistake, that's okay. It was okay. It was okay to be wrong. Can't get them all right. So, and then still make the same mistakes I do. I just make them a lot less than I used to, but still every once in a while I'll make like a mistake that just like the simplest mistake in a moment of just the market caught me off guard or something, or I didn't take my loss as quickly as I wanted, or I didn't have the right position size for whatever reason. And so, yeah, you're still going to make mistakes, but and you want to review them at the end of the year. Like I went to the Founders Club this weekend and did like a little presentation on, some kind of how my process and how I manage that equity curve, et cetera, et cetera. And it's very empowering. It's hard sometimes to go back and look at your trades, admittedly, because you feel, especially if you're going to show them to other people, because sometimes you feel so silly, like, gosh, how did I make that mistake? Why did I do that? But it will help you to learn and recognize yourself and how you trade it / invest, and you can work on yourself in that regard. Okay, so here's our contact information: 800-831-2525, marketsurge@investors.com. Have a great weekend, everybody, and we will see you next week. Bye-bye.